morning. On behalf of Jay Del Rio, thank you for joining us today. My name is Marion Guerrero. I am part of the client success team, and today I will be your moderator for the session titled Tax and Customs Strategies, USMCA and Plan Mexico. Today we are honored to have Blanca Montaño, Maquiladora Industry Lead Partner, and Antonio Ávila, Foreign Trade Partner, both from J Del Rio. Blanca, with 2 decades of professional experience, Blanca specialized in tax advice for investors, both nationally and internationally. Her focus is on providing high-quality services to clients from various sectors with a special emphasis on the manufacturing and export maquila industry, as well as the consumer products industry. Blanca is a certified public accountant by the Mexican Institute of Public Accountants, graduate from the Universidad Autónoma of Baja California with a master's degree in finance awarded by the University of Guadalajara, and a specialty in taxes and legal services obtained at the Universidad Panamericana. In addition, she has complemented her education with a diploma in senior management from CETIS University Technical and Higher Education Center. Her commitment to the excellence is reflected in her dedication to advancing her clients' businesses through deep technical knowledge and exceptional customer service. Our next speaker, Antonio, holds a degree in law and international business from the University of Guadalajara, an MBA from ITESO, as well as specialized studies in supply chain management from Rutgers University and in logistics from Loyola University, Chicago. He had also completed contract law programs at Yale University. He is a compliance specialist certified nationally by Conocer and internationally by the Professional Evaluation and Certification Board of Canada. With over 20 years of experience, he has served as a foreign trade compliance advisor to hundreds of companies across various sectors with a strong focus on IMEX industry. He is currently a foreign trade partner at J Del Rio. Welcome, Blanca and Antonio. Now I'll give the microphone to Blanca.
Thank you, Marion, and thank you, Antonio, for joining us. Welcome, everybody. We're very happy today to be addressing the issues of tax and trade strategies in Mexico. Our agenda and what we're going to talk about today on the tax side is about Plan Mexico. What are the main topics, the main goals, and how we see it's working, although it's very recent, the enactment. On the customs side, Antonio is going to talk to us about tariff changes. So, all these roaring developments that are happening and how can companies work and evolve too with this. And finally, we'll talk about recommendation and our final remarks and how we see these working out in Mexico and in our economy, and more importantly in our businesses. So welcome again, and we're gonna start with Plan Mexico. So what Plan Mexico is? It's a comprehensive proposal by the government, our new president, technically new, President Sheinbaum, is bringing forward this initiative that it's not only an economic initiative, it's also a comprehensive strategy, because it involves industrial efforts, it involves a lot of focus on housing, employment. They're focusing on high earning employment. They are focusing in education and also in energy. They already are acknowledging that we do have in Mexico as a country some issues. I might not say problems, but we have some challenges regarding energy and as rule of law, which this Plan Mexico intends to type of contrast, or at least to help our country to get better on the business and on the economical side. So before going into detail about Plan Mexico, I want to show you some figures about the measure of competitiveness of Mexico regarding the whole world. So the IMD, it's a ranking of competitiveness, and it measures right now 67 countries. I'm afraid to say that we are ranked right now on the place 56, and as you can see in the first table, it's not been good for our country. Like, we've been losing competitiveness. What is this competitiveness measuring? What they're measuring, it's not only the GDP growth. They're measuring GDP growth, the social the culture, the political environment, how the government works, and the infrastructure. So as you see, the basis for why we are ranked on number 56 of competitiveness is we have serious issues on uh, government efficiency. As you see, like, we're ranked 60 of 67, and infrastructure 62 of 67. So as you see, the other one that we're kind of like the best one is economic development, or the economic um, sector. We're in ranking 25. So why are we bringing this up? Well, as we are talking about this, the government is acknowledging that they need to get better on the issues of government efficiency and infrastructure, and that is why Plan Mexico is a good strategy, and at least it's a strategy, that we didn't have in at least like last presidential period. Well, also, as a good uh, image is to see, okay, where are we as a country, but also because of how our states are faring. So as you see, the more competitive states are Baja California Sur, are Nuevo León, are Coahuila, and Mexico City. So those ones are the ones that fare better, and as it measures almost the same things as the first one. However, this is a index made by a Mexican organism, INCO. And well, let's also hope that our local governments take advantage. And I think they're, at least I'm in Baja California, I can see that our government is trying to um, profit on Plan Mexico, and that we can improve all the issues that we have and get better in every state. So what are the key points of Plan Mexico? Plan Mexico, what they want to do basically is the nearshoring. In this case, it's probably sometimes we have heard a lot about nearshoring. In this case, I would think let's try to protect first what we already have in Mexico, like our investment, that we don't lose investment. That I would try to like defend the investment we already have, but they are also like and which is good to increase the new investments in Mexico by nearshoring. It is uh, it is difficult because we have a lot of, as we already saw, we have a lot of internal challenges, but also we have obviously external ones, and that's one of the topics that Antonio is going to talk about later, about how precisely address those external challenges that come come to our country, but Plan Mexico, it's addressing the internal ones. And Plan Mexico, what they want to do is increase national and regional content in strategic sectors. I'm gonna be honest about these specific key point. It is difficult sometimes, or what I've heard, to include national content, because sometimes the materials or the raw materials or the inventory is non-existent, or the quality is non-existent to the quality needed. And that's why also one of the key points of Plan Mexico is to increase the added value to the local supply chain. No, so yes, everything is trying to go hand in hand, so that okay, you want to increase national content of goods, but they need to be better. Okay, how are we gonna do that? Well, by promoting industrial careers in strategical regional development zones, the industrial hubs. How are we gonna do that? Well, creating well-paying jobs, and which that's a good change from uh, other years that it was more focused on like lower wages, lower wages, yeah, lower wages. And in this case, they're trying to focus on high education, or middle and high education, technical education. And a last note about the national content that worries me, it's about maquiladoras, because maquiladoras, this special regime that has worked very well since the 60s. One of the requirements that we have right now is that the goods are imported on a temporary basis, the raw materials, and then that they're exported. So technically, if a maquiladora is requested to increase their national and regional content, it would not be compatible with the tax laws as we have them today. That's another issue that I see a lot with in my experience, is that the foreign or the trade laws evolve better and adapt better to business, to our current business strategies. Tax laws, on the other hand, are slow to get updated. And in that regards, I wish there could be more updates on the tax laws. And I'm not saying just because of the thing of evolving or changing something every day, but to adapt to the current situations of the economy. But well, that's it goes on my wish list to Santa Claus. So what are the goals for Plan Mexico? It's very important to mention these goals are to be attained by 2030. That it's the period of the presidency of President Sheinbaum, and what they wish is that Mexico is part of the top 10 world economies. Will that be possible? There's a lot of financial and economies that don't think so. I'm as the same. It's this. All this is a plan. All this is strategy that can be evolving. As of now, what the economists are saying is that we won't be able to make it. That the next 15 years we will be ranked on the number 15, um, because precisely right now with how everything is moving, we're already in number 12 or 13. And because we're not getting better, like we're gonna be in the 15th position. So well, let's hope that all this plan works, and also if it's not going on the way they need, that they readdress like the directions, or give more um, benefits or incentives for the foreign direct investment, which they want to reach $100 billion annually from here to 2030. They want to generate 1.5 million additional jobs in specialized manufacturing, ensure 50% of supplies in key sectors such as textiles, footwear, furniture, and toys are made in Mexico. as I'm saying, it's kind of like a very protectionist plan. It is good to protect our domestic investors. However, as you've been seeing in this whole trade war, it's very difficult to close our way, or close and see and shut off like the global economy, so they want to increase domestic content by 50% in the strategic sectors, allocate 50% of public procurement to domestic products. Also, they want to develop the vaccines in Mexico, reduce the through digital filings and procedures the time required to finalize investments. Actually, the number 8, I think, something that that if it's how do you say, if there's a success in number 8, that would be an awesome development for every business in Mexico. Right now, a Mexican business or a company will take around 2.5 years to get all the permits needed to, for example, to manufacture. No, 2.5 years. They have a goal to like go to 1 year, 1 year and a half. Like they want to like crunch the time. I still think that 1 year would be a lot. Um, I think we should be better on that part if we want to like move the economy. But well, let's start small steps, no? So in that case, with that item 8, what they want to do is they want to enact a digitalization law and to simplify the filings, and some filings that are duplicated in like the states or in the federal. And so let's hope this brings prosperity for all the companies, no? So also they want to train professionals and technicians in strategic sectors and environment and sustainability, and they want to um, give financing to small and medium-sized companies. Why? Because how would you increase national content if you don't increase your suppliers, like, right, like your supply chain? So it is as I was saying, a comprehensive strategy, and they have thought about data, they have thought about housing. Let's hope that well, that it happens, no? How in this case, how the plan is, or what we know right now, how will companies be supported? There are 3 strategies or strategies right now. One is, as we were saying, they're going to give financing to small and medium businesses to increase supply chain in Mexico. And one, I think that the cherry on the pie would be IMEX 4.0. That in this case, Antonio can talk about more since it's his specialty. However, we as Maquiladora Industry, we would be very happy to receive news about like a new a new development or something that makes it easier for companies to comply, because it is a good it has been the IMEX program has been a good uh, tool for companies, for maquiladoras to manufacture in Mexico. And remembering that maquiladoras is it's I don't remember the number, but I think they cover 60 to 80% of all the exports in Mexico. So it's a very important sector and gives employment to a lot of people. And finally, they're going to enact as a decree where they do as strategic regional development zones. So they're kind of like industrial hubs, and they're going to. This is just right now. This is in the plan, but it has to be issued by a decree, where they're going to identify per states which are the main sectors that they want to develop in each state. And based on that, they're going to give tax incentives, and custom special regime. There is where we're going to see a little bit of how the sectors are going to be organized. So if you see the red one is that obviously is the border. I am afraid in here, like in the border zone, and as I was telling you, I'm in the border zone. They didn't include like medical devices right now. I would, in this case, I would hope that our maquiladora associations would put, they would put medical devices, because we are, at least in Baja, we're very strong in that area. So but well, this is kind of like a work in progress, and I know that there's already a lot of um, work tables or work around tables where everybody is negotiating these type of industrial hubs that are going to focus on semiconductors, which states do more of textiles, or which companies are gonna do more on the vehicles and etc. No? And another way that Plan Mexico is trying to increase investment by the nearshoring decree. The nearshoring decree was published in the official gazette in January, and what they're giving in this decree is the immediate deduction of fixed assets, and it goes for any industry, and it goes the immediate deduction up to 89%. Obviously, it depends on the fixed asset. Also, the other additional deduction that we have is for training of workers linked to educational institutions. So here they're giving an additional deduction of training, and also for innovation expenses related to if your company is gonna do a patent. If they're gonna patent something. I do have in this case I do have a little criticism about about these decrees, because how the decree came out is like, we're gonna give you some regulations. The regulations already came out in March, and there's limits on how much they can give immediate deduction to. So it's limited. It's not, even though that your company, if all companies would want to like use it, there's gonna be, not everybody will be getting it. Also, you have to present this to a committee, an evaluation committee, and this evaluation committee is going to request for you, obviously give the most important information like your incorporation deed, etc., but they will want to see an investment plan from yourself, like, oh, you want to use the immediate deduction on, like, imagine a facility. Well, tell me what are you going to do in that facility, what is your this is very common when the government gives us incentives, which is, I don't see it bad. However, it's not as straightforward, and it's not as easy as I think should be, in order to that the economy moves like quicker. Also, the additional deduction is not about the amount of what you're doing this year. For example, in 2025, it's the difference. The additional deduction goes because of the difference of what you spent this year, 2025, with what you spent, with the difference with the average of the last 3 years you spent. So the additional deduction is on the difference. So if you didn't spend more this 2025, you wouldn't have that additional deduction. And I know it's kind of like they cannot give out like tax incentives, because actually they're looking for um, places, or they're looking for money from like where to get for their taxes, or for their spending, government spending. But well, yeah, this I do have my limitations with this decree. As I say, I think one of the issues, or not issues, one of the observations I can tell you is that you can address this critics, constructive criticism to your associations, maquiladora associations, commerce associations, because they're like tables of communications with the government. And I think if we address that this is not as great, I think the government will eventually evolve. And one of the things that I've been seeing like in the last months is that a lot of they are moving a lot. They're the last month, or we can go ahead. I think I have a little bit of that. For example, what is the current status? This was one of the conferences that the government does every morning, but there's they do bring some important information in those. Um, they are promoting, in this case they're giving us a little bit of information they have, but also they're promoting with the ambassadors in the whole world, the ambassadors of Mexico, so that they can promote Plan Mexico in the countries. No, so they're moving and they're telling, you know what, right now we have identified around 1,900 projects. With that, we already have identified that $298 billion would be able to come into Mexico. However, well, there's from those projects like 446 have issues regarding, and this is something that it's recurrent, no, water, energy, infrastructure, and rule of law. That they don't put that there, but rule of law. So I hope that they address all these issues so that we can have more investment. And finally, this is a very good news about Plan Mexico. These companies have pledged to do these investments in Mexico in the years that are stated there. I'm not gonna be. I don't want to be, or we cannot be. How to say, super like blindsided. Doesn't mean that these companies were not going to do these investments anyway. They're already in the country, and most likely they were going to do these investments by themselves because they need to do it. Like for example, I was hearing that Grupo Modelo is going to invest that money to revamp one of their plants, and uh, Amazon Web Services. Actually, that's very interesting because that is new. They're going to do a data center in Querétaro, and that one is like a good investment. Obviously, all of them are good investments. Netflix is gonna bring that money to do more movies in Mexico, but like in this case, we need to see what happens because Netflix is saying they're gonna do more movies in Mexico, but as you saw last week, uh, President Trump decided to put tariffs on movies that are made abroad of the U.S. No, so it's something that it should be always in evolution. And as I was saying, this probably doesn't mean that it has to be with Plan Mexico, but it is good that we do have foreign investment and that this is bringing money, jobs, and the economy will be moving, and we're very happy that something is being done. No? So I think regarding Plan Mexico, we have another one because what are we gonna be on the lookout? And this is the last part of Plan Mexico, the upcoming milestone, and this is the official website. The website is not working yet because obviously it's not on yet, but they're going to do this kind of uh, one-stop shop to do all the filings for a company to operate. Um, as I was saying, this would be very good news for all companies, Mexican and foreign companies. I would hope that this works as they want, and this is gonna bring a lot of positive economic success. I hope I hope to see it, and I would tell you that this is something that it's going to affect all companies, and I would tell you that it's important to be on checking out how it evolves. Um, And well, in this case, let's hear about Antonio, what he can tell us about the trade part, which it's always evolving and on a daily basis.
Thank you, Blanca, for sharing this information. So let's start with the tariff changes, as we have different stories every day related with tariffs. So we are going to review what we have today as a tariff, and now what it's pending to new tariffs also for the next weeks and months. And the first point is to review why we have tariffs. No, as you know, one of the principal topics that President Trump says is that we have deficit in trade balance. What it means that Mexico is exporting more that what United States is selling to us. So we have a positive balance as Mexico. If you see this chart, we have in the last year that it's 2024, we have 2.7 times the difference of this deficit. Also, we have more deficit in the last year related with this trade balance. So it's part of the topics that it's related with the tariffs. So as you know, we have different products that we are exporting to the United States. One of the principal products that are affected is parts of vehicles, electrical equipment, machinery, and these kind of products also are affected with these tariffs. We are going to review the different tariffs that we have. If you can see this slide, we have like 8 different tariffs and ways that the authorities of US can request for a specific depending of the product, we are going to have different rates. So the first rate that we have, if you can see the slide, it's the general. The general, as you know, it's important. We know also the general rate as most favored nation, as all the countries that we are part of the World Trade Organization. So this is the first one. The second one is, as you know, the related with the border. As you know, currently we have the 25% of these specific tariffs, and also we have other different tariffs that we are going to talk in the next slides. So it's important to know the product that we are exporting to United States and the different cases that probably we need to review or to validate. So the first one that we commented is the general rate. We have an example. If we are going to export some textile articles, so in this specific information for the tariff of United States, the general tariff, it's a 11.4 rate of this duty. So when we need to pay this tariff, if the product is not part of the USMCA treaty, if we are exporting without a certificate of origin, we must pay the general rate. So it's important to know that part of the benefits that we have as Mexico, it's if we have the USMCA certification of origin, it's not necessary to pay any duty because we have these benefits related with the treaty. So, but if we don't have this certificate of origin, we need to validate what is the specific rate that we must pay So it's necessary to review the harmonized tariff that of United States. Also, it's in this website if you want to validate for every product that you export to United States. As you know, on March 4th, it was the day that it was imposed the 25% of the tariffs related with the border situation that we have. And the day of March 7th, it's when we have the exception. If we have a certificate of origin, the certification of origin, it's not necessary to pay this duty. So that's very important to remember. And just to be validating that the product is USMCA origin. So also the following days, as if you see the date, this March 12th, it was imposed another 25% related with the products that are made with aluminum and also steel. So and it's important to remember that it's another duty that is necessary to consider. So we have a specific another rates. For example, for Russia, it's 200% of these tariffs. So it's important to remember that we have some exceptions for not paying this 25%. The exception, for example, for steel, is that the product it's of the exporting that we are made for Mexico. It's smelt and cast in United States. The steel is not necessary to pay this tariff. And also for aluminum, we have an exception that it's smelted and cast. Also in United States, we have this exemption. So it's important to review and validate if it's necessary to pay this specific duty. So we have another duties, for example, the reciprocal tariffs that it was imposed on April 5. This reciprocal tariff for Mexico is not necessary to pay this reciprocal tariff because it's not applicable for Mexico and Canada. So when it's applicable, we have a 12% of this specific duty, but we are going to pay this specific rate only when the 25% of the tariff related with the border is closed. So when we finalize the 25% of the tariff related with the border, so we are going to have a different tariff that is going to be the 12. So currently it's not necessary to pay this tariff, but all the countries that export to the United States are paying currently the 10% that is the worldwide tariff related with the reciprocal tariff. So it's pending to review and a specific tariffs for other countries. As you know, we have a specific list of different countries that probably they are going to pay more, but currently they are just paying 10%. So in the following days, we expect to have another list with different tariffs related with this reciprocal review that it's doing United States. So currently we have a pause, a tariff pause. So it's commented that we have 90 days of this pause, and also on the month of July 8th is the last day of this 90 days. So previous of this date, or minimum this is going to be the last date when we are going to have the list that I commented with the new tariffs. So, but the only exception with the reciprocal tariff is China. As you know, China, it's necessary to pay 125% of tariffs. That it's added, it's necessary to add the other tariffs that we have on March 4th, that it's 20%. So we have, considering both, 145% for products that are from China. So it's important to consider. Also, as you remember, it was analyzed in the past weeks that it's necessary an exception for some products. For example, products, TV screens, computers, smartphones. It's not necessary to pay the reciprocal tariffs. So it's one of the exceptions that it's analyzing the CBP, and so probably in the Department of Commerce, they are going to provide different tariffs of these products, but currently it's not necessary to pay any tariffs if we are sending these products to United States. It's not necessary to pay reciprocal tariffs. So also, we have another publication, as you remember, with another exceptions that it's pretty important to remember that the political tariff, the policy related with the tariff, it's not to have as cumulative tariffs. What it means is it's not necessary to have more than one tariff. So it was some clarifications related with this point. For example, if we are exporting to United States from Mexico, the products that we are exporting are considering this duty, that it's the duty related with the border. So we have an exception. So it's not necessary to pay, if you can see in this specific information, 2D and 2E. What it means, 2D, it's not necessary to pay for to add the duty of aluminum, and also it's not necessary to add the duty of steel. So what it means is, if we need to pay a specific tariff, is not necessary to add another ones. So it's important to review this specific publication that also in the slides that we are going to share. You can see the website and these exceptions that we have. So it's pretty important to review, and this consideration that we have, it's also a benefit for everybody. And this benefit of this not having these accumulative tariffs, it was applied for the past. What it means that all the imports that was made from March 4th to today, we can request the refund of this tariff that we paid in the past. Also, if we paid this as a cumulative tariff. So it's pretty important to review with your custom broker that probably you paid both tariffs, for example, the aluminum tariff and also the border tariff, and you can request the refund of the tariffs of one of them. So that's pretty important to review and request this refund. So also it's important to remember that the minimis was finalized this May 2nd. So it's important to remember that the products that are from China, they are going to pay this minimis, and so we don't have the exception that the $800 for imports that are to United States. And as a resume, as you remember, this is the tariffs that are necessary to pay if the product is from China. This 20% related with the first duties, and the second one is the 125% that is related with reciprocal tariffs. So and also related with the vehicles and car parts, as you know, the current status is that if we are exporting vehicles from Mexico to United States, also it's necessary to pay this 25% related with the parts that are not originating. So the modification that we have with the automotive parts are that if the product of the part qualify as a USMCA origin, it's not necessary to pay this 25%. So that's good news for all the companies that export automotive parts. So it's not necessary to pay this 25% if your product is USMCA origin. So there are another or different payments that probably is necessary to review. As you know, in United States, we have the Section 301, that it means duties related with unfair trade practices. So there are some products that also pay 25% or similar duties. So if we are in this list, probably necessary to consider another duties. So related with these unfair trade practices. So it's necessary to review with the list that we have in the website of the CBP. And also we have different duties, for example, for safeguard measures. There are some lists that probably necessary to pay tariffs that are related with safeguard measures. So also it's important to review this list if we necessary to consider. And this last point, as you know, we have a counter value duties. What it means that there are specific products that it's analyzed for the Department of Commerce, and for example, the tomatoes, the fresh tomatoes from Mexico, they are considering to pay a duty in the next in the following weeks. Probably it is necessary to review this specific case because in Mexico, as you know, we export many trucks of tomatoes. So it's important to validate how it's going with this specific product. So what are the implication and next steps that we need to consider as a company? As you know, because we have different origins, different products that with different tariffs. So what we are considering is that we are going to have origin verifications from the CBP, considering, as you know, products that are made from aluminum, that are made from with steel. And also what we expect is to have more questionnaire from CBP that are part of the standard process that they made this analysis, and also reviewing the certificates of origin, because in some cases there are errors that are very easy to identify. So it's important to elaborate your to fill your certificate of origin properly, because there are many errors when we select the origin criteria. So that's pretty important to make a specific analysis. And if we are not the a company that produce the product, if we are a trading company sending the products to United States, also it's part of the compliance is to request the certificate of origin to the company that produce this final product. And if we don't have this document that proves that as it's a USMCA origin, we cannot make a certificate of origin as exporters. So it's important to have written a document that it means the certificate of origin to validate this information. So it's part of the points that we need to validate. Also, as you know, when we export and we use products that are not 100% from Mexico, United States, of Canada, we need to review the rules of origin. There are pretty technical information that is necessary to review if we are in compliance or not with these rules of origin. This is an example, so I'm not going to focus in this analysis, but it also is important to make a review if we are doing well. Also, because probably we are going to have a visit from CBP, or probably we are going to have a questionnaire in order to validate that the origin is the correct. So it's part of the ways that they do. And if we have a questionnaire from the CBP, I like this question that is pretty important for everybody, because if we use non-originating materials, for example, not from Mexico, United States, or Canada, we must provide evidence and explanation why the product qualifies as a USMCA origin. What it means that it's not just to fill the certification of origin. We must have a proper documentation that proves that the product that we are exporting to United States and is not paying duties, it's correct, the origin. So that's part of the way that we need to do. And also the penalties. In Mexico, we have some penalties if we determine that the origin it's incorrect. If we determine that is not the correct one, in the federal tax code, it's considered like a crime to make this procedure. So it's important to review that we are doing well in order to not have problems because this consideration as a crime. So the final recommendation that we would like to share with you, the first one are related with foreign trade. Review your certification of origin, the documents that prove that your certificate is okay, in order to don't have problems with the CBP United States and with Mexico, also with tax authority. So it's part of the steps that we need to follow. And I would like to ask to Blanca if she can share recommendations related with transfer pricing and so on.
Yes. Yes, these are very good actions to take in your companies, and we're doing a comprehensive approach, as Antonio was telling us on the foreign trade part. What other areas of your company could be affected on the transfer pricing policies? How your company does transactions with each other, with the principal, with the owner of the goods, the owner of the machinery equipment, the Mexican company. So everything has to be taken in consideration. Who's your main client? Where the goods are sent? If they're sent to the U.S. or then sent to like Europe. Sometimes there's a lot of jumping in between countries that it gets imported first to the US and then into Mexico and then it goes to etc. No, so all that will be looked on a comprehensive analysis where on the tax side also we are going to or we can do a diagnosis more on the part of reviewing if your current transaction, if your current operations are efficient with the current situation and on the probably the continuous evolving of all the tariffs and not only tariffs, not like us, also on USMCA changes, etc. And finally, on the consulting side, our partners and teams in consulting can help you review how this is going to impact financially to your company, how also your company is valued, how, like, for example, in the case that you want to restructure or merge, if you have several companies in Mexico, if you know what, I need to merge my company, or for all those types of transactions, mergers, acquisitions, splits, these are consulting team can help you. So it's very important that that you know that we can do a support, a full support of what's happening and at this moment to your company, and also that it's good that you do look through all these areas of your company, because it's we cannot say we I think we are as Mexicans, we are used to rough times and we are prepared, and I think we're gonna go through, but it is as in this case, as President Trump says, that there could be pain, and well, we gotta try to work around and be still working. Okay. If you want to comment about what do you see in the outlook, Antonio?
Yeah, as you know, it's important to consider the future. As you know, there are some reviews that it's made by the Department of Commerce currently. These reviews are related with some specific products, for example, the semiconductors, pharmaceutical products, and some specific trucks. Also, if there are reviewing some trolls, some critical minerals, and Cooper. So it's important to have this list, and in this setting, like the movies that Blanca commented when we start this webinar. So we expect to have more tariffs in the following weeks, or more reviews related with the specific products. So it's important to review what is the status of your products that you are exporting. Currently we are having a review, so in order to consider some risk of your operations, and also to remember that we are going to have a review of the USMCA treaty, that it must be made in this following in the next year, 2026. But there are some meetings, some pressure from U.S. authorities to start as soon as possible this review with United States and Mexico. So probably we are going to have this review previews of the day that we expect. The expectation of this review is July 2026, but we need to be reviewing this update of the tariffs every day. So I don't know if you want to close, Blanca.
Yes. Well, we thank you for being here today. We want to express our gratitude for like listening to us, and also our invitation. If you have any questions, either to be done in here in the webinar, or if you have questions specifically about your company, well, you have our information here in the screen. We are very happy to help. We are almost, sometimes I feel that we are like promoters of investment in Mexico, and I think it's something that we love to do. I think we want to see our country strong, and I think also looking for a win-win, right? We don't want to. We want like anyone that comes here to invest in Mexico, that they can profit and on what they can, what the good thing that they can get from Mexico, and happy to help. Thank you very much.
Thank you for your time.
Okay, so thank you to our speakers, Blanca and Antonio, for sharing all of these relevant topics. And so now we will start with a Q&A session. Unfortunately, due lack of time, we will only be answering one of your questions. But if by the end of this blog, your questions are still unanswered, we'll contact you as soon as possible. So this question is for Antonio, and is, which is the future of the tariffs?
Okay, thank you for the question. As you know, it's important to remember that we expect to have more tariffs, but not as a general tariff, not as a universal tariff, just specific with sectors that affect the US trade. So as I commented previously, we expect to have tariffs related with pharmaceutical products, with semiconductors, with trucks. So it's important to review this point. And when they are analyzing more and more specific products, or they are requesting some help from President Trump, they are reviewing it is necessary to consider more tariffs. So what we expect is to have more reviews of possible tariffs in this year, but the following year it's going to be different, because what we expect is to focus in the next year in the review of the USMCA. So that's what we expect for the tariffs. Thank you, Marion.
Thank you, Antonio. So we have now reached the end of our webinar. On behalf of J Del Rio, we sincerely thank you for your participation. We remain at your disposal for any questions, inquiries, or advice you may need. Please feel free to contact us at the emails displayed on the screen. And see you soon, and thank you very much.